Look at what you guys have at your fingertips, right? So when you hear, like something on CNBC and some analyst coming on and saying this sort of thing, understand what their motivations are. If you like a stock, you look at everything around it and do more digging, do more research, and it helps you get conviction.
You have an idea about an investment, you have an idea about a trade, but if you're doing that in a vacuum, it's, you might miss something.
I mean, we all like to be contrarians, think kind of away from what everyone is doing. And so if you take that approach as your base and start to hear the argument on the other side, whether it's a long or a short, give me your short case, give me your long case, and go from there.
So that's sometimes when you're doing your work, it takes a little bit of time. There's a good probability it comes to fruition.
I'll say this, it's very hard to wear both hats, those of a trader and those of an investor. I just want to start in terms of process, because I think it's really important for the folks out here. Historically, there was a way to get information and a way to get trading ideas, Vinny, but the world has changed a lot. And I think for a lot of people in this room, how do you come up with the ideas? What's the process? How do you see things? What's the rigor involved to be able to do some of the things that you've done so successfully?
Well, for us, it's actually, first off, everyone, thanks for having us here. It's just fantastic. For us, we've had to evolve. Because we, for the most part, we were institutional people. And what that means is both Porter, myself, Dan, we worked at hedge funds. So the information came at you from the various broker dealers. And when we left that world, we had to go and find information on our own and source it on our own. And quite frankly, I would tell you the amount of commission dollars that you spend on research as an institutional player is too much. It's overvalued. And particularly, it's more commoditized and the like. So Porter and I just went on our own little journey of finding information, content, sourcing, free of charge. So we would find ourselves, initially it was Twitter or X, or whatever we call it these days. And you do a great job of, you think of an idea, you put in the ticker, and all of a sudden a laundry list of people who are have more expertise than you do. Then we find ourselves on Discord chats. And we also find ourselves, reading quarterly transcripts. Looking at the financials, that's all free of charge. So a lot of the content that we get now is very inexpensive relative to what we used to spend tremendous amounts of money on.
Porter, I mean, you guys do not work in the same office, but you probably talk dozens of times each day. When I say you guys, I mean you and Vinny. So speak to that, the community you've built. Then, Steve, I have a question for you.
So I want to just back up 1 second and we're happy to be here, and the three of us are very. Have you seen the movie? Not Wall Street people, right? And talk about the movie, and we were really pushing against the Wall Street banks and what they were doing, and it's and it's safe to say we wouldn't be here at a Robinhood conference if we didn't believe in the product. You can see with the active trading platform, 50% of active traders use a desktop, right? And so this is a nice evolution in the process of what they're doing. And, we obviously, I sometimes use my phone to trade, but I'm usually on the desktop trading. And if you're a, serious person like I am and spend all day in front of the screens, you want a desktop. And so I think this is a nice evolution of the process here. So.
Steve, Goldman Sachs doesn't make a lot of mistakes, but they made one when they hired me in 1996. So I just want to put that out there. But one of the things that I learned there was take a partner when you're putting on trades. And what does that mean? It means sort of have somebody else look at what you're looking at. Mm-hmm. I want to speak to the community that you've been able to build here, because we walked around the room last night, and that's what you felt, a sense of community. And it builds on each. People meet each other for the first time. What are you looking at? What are you thinking about? Can you speak to what you've done here at Robinhood?
I just talked about it right before we came up. I said, you're going to hopefully learn, this audience and everybody here is hopefully going to learn a lot from you all and others that they're going to watch, but they're going to learn a lot from each other. I think validation is really important. Like you have an idea about an investment, you have an idea about a trade, but if you're doing that in a vacuum, it's, you might miss something. There might be something that even is more additive to that. investment thesis. And by bouncing those ideas off of each other, which we try and provide people a community to do that, I think it's only going to help you in the long run. The idea that it's like a zero-sum game, you're going to win, you're going to lose, that's not the case, right? We can all be successful. And, we're going to talk about it a little bit over the course of the next couple of days, but there's a reason why we built this index, the RICS, it's called the RICS index. And the reason why we built that is because we get really tired of the notion that permeates out there that retail investors buy at the top and sell at the bottom, because we know it's not factually correct. We have the data. We can tell they're very successful, actually. If you look at what they're doing from an investment and trading standpoint in aggregate over time, they're successful. And so we just want to make sure that everybody gets a fair shake and has access to everything that all the institutional players have, all the products, all the capabilities. And once you do, you're competing on a level playing field, and it's awesome.
I agree with that, and I think you've done an amazing job. And I've watched sort of the evolution of the company, and it feels as though you're just getting started, really. And I just saw Vlad before on CNBC, and I thought he did a great job sort of illustrating and speaking to exactly what you're building here. So congratulations. And I want to go to Danny Moses here. Anybody fans of Danny Moses? Danny Moses fans in the room?
I got it.
That was tepid at best. Danny's absolutely brilliant. And what I've learned from Danny over the years is he's always looking for somebody to sort of punch holes in his argument, or you're looking to punch holes in an argument. In other words, you have a thesis, you believe in something, but you want feedback, you want pushback, and you're always pushing back against a narrative, or you're looking for pushback on your narrative. So speak to the importance of not being dogmatic. Now, forget about life, because I think it's obviously important there, but specifically in trading.
I mean, we all like to be contrarians, think kind of away from what everyone is doing. And so if you take that approach as your base and start to hear the argument on the other side, whether it's a long or a short, give me your short case, give me your long case, and go from there. The problem has been you can do all this bottom-up work right now in this market. There's so much liquidity in it in general. It hasn't really paid that much to think that hard about some of these stocks and companies. And so you really have to understand the managements, the companies, and so forth. But I do like getting pushback. And listen, I'll pitch longs as much as I'll pitch shorts, but I like to get pushback, obviously, on both, and you can learn from it. And I think that when you look at the stocks that customers in Robinhood trade, right, very liquid names, ask the question, if there's 75 buy ratings on Wall Street and one name and no sell ratings, or there's one thing I want people to understand. In the institutional world, when you see price targets move up, and research analysts have options. They can either come out on the podium and speak. If you want to speak on the podium, at Goldman Sachs, the research director says, okay, what are you going to do? Are you downgrading the stock? No, I would never downgrade that stock. I'm going to raise my price target. Well, you're raising your estimates? No, but the stock's moved up. So people need to look at those things and understand, don't get caught up in the frenzy. I'm not saying you shouldn't buy those stocks or whatever. So I think thinking away and the reasons that either stocks are moving, the reasons analysts are coming out on names is very key. And we used to, we would own names that are covered by 2 analysts or 3 analysts. And we won't go into all the small cap names probably that Porter and Vinny are involved in right now. But rest assured, some of them aren't even covered by Wall Street. Yeah. And so, again, I like to think away. I was very negative on the SPACs market for a long time. And the interesting thing about that, just to give you an example, how to think about things contrarian, there's a lot of good companies that have evolved from the SPAC market, but people left them for dead. Because why? Because they were SPACs and they don't work. So things like that. So just ask yourself, be honest with yourself, ask yourself questions. And, the last thing I'll say is, so this is for longs and shorts, is that if you buy a stock for a reason and it gets to a certain level and it doubles, you now doubled your position. Is it the same risk reward at $100 that it was at 50? Maybe, but probably not. So don't be scared to take some off the table.
And we're going to talk about that for sure, but I want to go to Dan here and speak to the process that you've implemented. Our show, if we make it to January, Fast Money will be on air for 18 years, which is a pretty remarkable run. And, it may look easy, and I'm sure there are times where you're throwing things at the television set. I know if I find myself wincing every once in a while, but there is a process in terms of the preparation for the show, but in terms of the preparation for the day. So maybe let the folks know how you think about the market and how you sort of process things and synthesize things.
Yeah, so just like these guys, I grew up in an institutional world, and we were so dependent on a lot of what was coming out of the Wall Street infrastructure. And at the time, these analysts could really move stocks. And we've seen over the years, it's just less and less so because of the democratization of information, right? Like, look at what you guys have at your fingertips, right? So when you hear, like something on CNBC and some analyst coming on and saying this sort of thing, understand what their motivations are. And I think that's what kind of Danny and these guys are speaking to a little bit. They got to keep the machine going, right? So for us, we've all kind of moved away from a lot of that over the years and finding alternative like news sources or idea generation. I think all of you guys have kind of embraced that. That's why you kind of gravitate towards this sort of community. So how do I think about information? How do I think about like setting up my mind to get ready to make a trade or come up with a thesis around a sector or a secular shift or something like that? I'm just reading a lot. I mean, like I'm reading a lot. From the moment I wake up in the morning at 6 a.m., I'm looking to see what's happening overseas. Where are the futures? What are the biggest stories that are going to dominate the day? Also understanding that there's stories that are going to come out during the day, and I have to be nimble, and I have to see how they all affect each other, that sort of thing. So I have an approach, and I'd love to hear what these guys have to say too. It's like, I take a top-down approach first on the macro. I have to understand what is driving the markets, not on a single stock basis, but what are the things going on as far as on the index level, geographically. I've learned so much about the bond market. It's not something in the late 90s when I started trading, and I didn't realize what the inner workings of that were, what it meant for the equity markets, right? Commodities. Guy grew up in the commodities sort of world. And then what I try to do is think about things that I'm interested in. So like oftentimes on Fast Money, it's an hour show. There's 4 panelists. There's a host. We'll probably have 2 or 3 guests. I'll go for 2 segments and not say a word. You know why? I don't know jack about the commodity space. I don't know jack about insurance stock. So I don't want to talk about it. What am I interested in? I'm interested in technology. And I've been doing that for 25 years. And there's been 3 huge secular shifts. And I want to be in front of them. I want to understand them. So I read and I try the products and I talk to people and I go to the conferences and I talk to more people. I go online. I figure out to these guys' points. So to me, it's a top down, bottoms up, meet in the middle, get in front of big themes. That's how I think about it.
All right, Steve, so I'm going to ask you because, one of the things that we used to get a lot of times was, can you trade or can you invest as a hobby? And the short answer is no. And I think you've learned, and I think the folks out here understand that you have to, by virtue of the fact that they're here, they understand the commitment that's necessary. And I used the word again earlier, I'll use it again, the rigor that's necessary. So speak to what you've seen in terms of the client base and in terms of the folks in this room.
I think for everybody, I was speaking with somebody this morning about it who's who's episodic. What I mean by episodic is sometimes you go through periods in life where you don't have as much time to put into learning, investing. So you might be comfortable with a portfolio and you might not be as attentive to it. But there's other times you're rebalancing a portfolio or you like what's happening in the market, it's ahead of an event, and you think there's opportunities where people get quite active. And then there's people that are just active all the time. And so I think, there isn't really, it's kind of there's sort of a whole gamut of how active people are. But something you said earlier, I think I'm just putting myself in their seat, which was really interesting. So there are fewer and fewer names now in the capital markets. The IPO market has kind of dried up a little bit. But what you said is the ones that aren't covered by the analyst as much. If I'm listening to that in the audience, here's what I'm thinking. Where do I find those? Yeah. Like where do I find, because you know what? Those are going to appreciate a lot more than the ones that have been out for a long period of time. My risk reward is probably much better on those, isn't it?
Yep, for sure.
Go ahead, Danny. Sort of opine on that.
They typically do not move with markets.
Okay.
So as a result, if markets are up, you could see the top 10, 15 names are usually up.
Yeah.
We call it playing in the land of misfit toys.
Right.
And we really do love it because it's extremely inefficient.
Mm-hmm.
However, there are lonely days where the markets are up and your stocks are doing nothing.
And maybe I'll even build it into so I told you, we obviously look at all of our customers' behavior because we want to help them make sure that they're navigating the market well. One of the things that we've noticed is, our customers used to be concentrated. They're less concentrated. So there's, and that's happening in the market in general. there's a little bit less concentration in the top 10 names, and that's healthy in my mind. But I'm just curious on your thoughts on that.
Yeah, I think if you find a sector or a theme that you like, you can find the entire industry and go through it and find the companies that aren't covered.
Yeah.
And you bring up a great point. There's no IPO. The reason there's no IPOs is most funds now are so big, they can't even buy the IPO because on a relative basis, it's so small. So you have companies that we call them orphans. They kind of sit out there. If they don't need investment banking, well, it's not going to cover it because there's no fees related to it. If there's no secondary offering coming, there's, on the exchanges, they're not going to promote it. So you can find those. To Vinny's point, sometimes it takes time to get these things to move. So whether you find one that pays a dividend, you get kind of paid while you wait for something, or there's a buyback that you're going to be safe. So look for those things because those are generational potential trades, and you can make a lot of money on those. And I always like to look on the longs. What's my downside? So we'll look at names that have cash, that it's half the value of the company, things like that.
Let me speak to something. And so when Danny was just talking about the IPO market and what Q just said, I mean, guys, there is going to be a flood of new tickers coming to the market over the next 2 years, especially if this market hangs in there. And one of the things I would say, this goes back to kind of figuring out what's going on. So start reading. If AI is like the thing in the public markets that's been driving so much of the performance for the last 18 months, start reading some tech rags. Who are the companies that are going to be challenged in NVIDIA? Who are the cloud companies going to be challenging Microsoft and Amazon? What are some of the components that go into it? What are some of the use cases? Because these companies are going to be coming public over the next couple of years. And one of them might be the next Google. One of them might be the next NVIDIA. And I think getting prepared for that, I suspect in the next 2 years, there's going to be 300 IPOs of related sort of tech names that are in and around this. And so those are the ones, like how much more can a $2 or $3 trillion market cap company go up? You know what I mean? At some point. And so finding some of those stories, I think is going to be really important and being prepared for that. So understanding what is probably one of the biggest secular shifts that we've seen in our economy in 100 years.
And you're saying the whole ecosystem, energy, everything's
Well,
surrounding.
these guys are going to talk about that.
Well, okay,
But,
good.
I mean, you can see it with, look at Apple. It's a $3 trillion company. All of us know they're less innovative than they've ever been, right? And they're just sort of, it's a cash cow. And you can see how AI is coming. You can see how the Chinese phone makers are making inroads. You can see how the shifts are going to occur. And a lot of these things happen slowly, but if you're ahead of the cycle and can see how things evolve, that's the way to look at it. And I will say that I think Dan's right about there's going to be a lot more companies. The backlog of companies that IPOing is going to be big. I would say that under different election outcomes, they're going to have I think under a less onersome SEC or regulatory environment, there's going to be much more of that.
Well, here's a great example, and I'm moving around, but the other day there was a headline that Qualcomm is not going to be pursuing an acquisition of Intel. Most companies never opine on rumors about M&A, right? Yeah. Until they have clarity after the election. Think about that. Okay, is there a floor in Intel right now? They've had 4 consecutive horrible quarters. Yeah. The stock is trading at 10-year lows or something like that. And it looks like it's the gang that can't shoot straight. Well, at some point, I'd say there's probably a floor in the stock. It could be really interesting to kind of put on an options trade. You know what I mean? That gives you the opportunity to define your risk, and you look out a few months. We're going to do more idea stuff in a few minutes, but those are the sorts of situations that I find really interesting. And think about what we just talked about before. That's a top-down thought about something that is very macro. It's regulatory. There's a geopolitical sort of nature to it as it relates to supply chains and competition in China and what might happen. And then there's this regulatory aspect. And so understanding those sorts of situations is how I like to approach an idea like that.
Vinny, I told you for a long time that I'd never seen the movie The Big Short. You'd get mad at me, and then I finally watched it. And the reason why I didn't want to watch it is because I knew I was going to get really upset by it. And when I say upset, I mean emotionally upset, which may sound a little bit hyperbolic or melodramatic, but it's true. And here's the reason why. Because you and your team, the group, had done so much thoughtful, rigorous work over a period of time. You unearthed every rock and looked under every stone, yet the market still wasn't behaving in a way that made sense vis-a-vis your work, right? So speak to that. Sometimes you've done the work, but the market continues to behave in a way that doesn't necessarily make sense. So there's a fine line between being wrong, and there's a fine line between knowing that you've done the work necessary and it's going to play out. So speak to sort of that, because all the traders in this room, investors as well, have learned the hard way that the market can be irrational a lot longer than you can be sort of sane and like, oh my God. Speak to that.
If you ask me whether you're a trader or investor, and I always, there's so many different ways to skin the cat. Like we tend to be more value oriented. Some could be more growth oriented. But the key attribute that we all have to have, and we fight it every day, is to be objective, right? And so you have to be objective, whatever your theory is in a stock or a company or a sector. You have to re-underwrite it all the time. So getting back to when you're wrong, or the scoreboard's telling you you're wrong, you need to re-underwrite the position and say to yourself, am I really wrong, or is just the market being inefficient right now? Back then, we felt probably the strongest conviction we've ever had in our lives that we were dead right, because every month data would come out strongly suggesting it's even worse than we initially thought it was, right? So to me, being objective, but on the other hand, there are other times when the world and circumstances change. So for example, recently, once the Fed started cutting rates, or even hinting of cutting rates, right? We looked at our portfolio, we looked at some shorts that we had that were very rate sensitive, and we chopped off 85, 90% of it, because you re-underwrote the position and you said, this headwind is all of a sudden going to become a tailwind for these stocks. Get the hell out. We should have went long. We didn't. But at least we reduced our risk to get out. Always re-underwrite your positions, particularly when they're going wrong. And don't let the scoreboard tell you. Let your underlying data and your work tell you whether you're right or wrong.
You know, obviously, artificial intelligence has been top of mind now for 18 months, and you guys obviously saw what was coming. But you said, okay, instead of do the obvious trade, they're going to be tangential trades that are going to make a lot of sense, Porter. And you found it sort of in the energy patch. And again, you were talking about things, I know this for a fact because you've obviously come on our podcast. You were talking about things 12, 15 months ago that are playing out today in terms of energy and AI. Porter, speak to that.
I'm actually going to let Vinny touch this, because he wrote on the subject in one of our quarterly letters about, he asked ChatGPT, what's going to power the AI revolution. So Vinny, why don't you tell the story?
So this goes way back. We've been advocates of nuclear and uranium for about 3, 4, 5 years. And we got in really well. And you talk about process, right? I knew jack crap about nuclear and energy. So what do? I would listen to a podcast a day on the uranium sector. I would call up what I would call the ninjas who specialized in this stuff. Slowly but surely, I started to realize, well, in and of itself, growth in China is going to power the uranium nuclear space more than anything else. And so we've owned it for 3, 4 years. And all of a sudden, this AI thing comes up. And you realize that if you're going to power these data centers, you need 24/7 constant energy, and everyone wants the energy to be clean. I mean, literally, we're sitting there and say, there's only one energy source that provides
They're not going to power with wind and solar. It's ridiculous.
And, because the batteries are just not going to make it up. So I said, eventually, they're going to find this uranium. And, Elon Musk talks about it. A bunch of others talk about it. Then, boom, Google announces a data center partnership. Microsoft announces a data center partnership. And the funny thing is, the spot uranium hasn't moved yet. Even it's actually down for the year. But there are other things that have moved. So we looked at it and said, I think uranium is going to be a 3 to 5 year investment thesis. And we wrote it up saying, how are they going to power all this stuff? And it was clear as day. It was uranium. Just took a long time for that to happen. 5, 6, 7 months, but it's happening now.
And the funny thing is that you think about just powering America, and everyone wants to, plug in their cars, plug in their new robots, and plug in their phones. How are we going to power all this stuff? And everyone, of course, wants to be green. And in our mind, there was only one real way to do that, right? Building wind turbines offshore, or solar panels in your farm, it just wasn't going to work.
Yesterday, I was joking with you guys. I sent you a text. Yesterday on CNBC, they had a guy in the morning, so it's prime time, right? Mark Nelson, right? The house Mark Nelson, right? I've been listening to Mark Nelson for 3 years talk about the uranium space. And he's this guy that has this really cheesy mustache. And all he does is he's a nuclear advocate. So the fact that he was on CNBC, this guy that I've been listening to that on some, uranium decouple podcast, all of a sudden in his primetime CNBC, I was just laughing my ass off. So that's sometimes when you're doing your work, it takes a little bit of time. But if you're really steadfast in what you're doing, it can, there's a good probability it'll come to fruition.
But it's a microcosm of the process. Like if you like a stock, you look at everything around it and do more digging, do more research, and it helps you get conviction in terms of maybe sizing up, or if you're objective again, I'm wrong, right? Pulling again, you have to be objective on all these things and say listen, this is not as good as I thought it was. And
It's a good example when you get a theme. How do you play it? There's only so many ways to play uranium. We won't go into names right now, but there's only so many ways. So what are the secondary, tertiary plays that you can look at that are related to it, whether it's infrastructure plays or whatever? You talk about the utility sector and how it's run, just to go into that for 1 second. That's a regulated entity that trades normally dividend yields relative to the 10-year. Like that's how they normally trade. That's not necessarily, yes, they're going to run that now, but you got to start to think about who are the other plays that you can kind of make there. So you can follow it all the way down to the money managers, the public asset managers that have uranium funds in there. You can buy them. So there's a lot of ways to look at it, but I think you can find those things and ways to express it.
I have a quick question, because I think, and I'm both a retail investor, trader, and I'm going to try and put myself in everybody in the audience's shoes as well. Though what you're talking about is a longer term investment, and so in the context of the way that you guys think about investing, I'm thinking about the way that a retail investor invests. Like they're going to probably want some investments that have a long duration and some that are much shorter. So it feels like even in the scenario where you guys are so convicted and you're convinced something's going to be right, sometimes I'm sure as a retail trader, you're questioning your own conviction. Right?
I mean, you bring up a point in terms of, if you think about it, we're all investors here.
Yeah.
I don't like paying taxes, right? Most of you don't like paying taxes. So
Anybody like paying taxes?
yeah. So one of the things that I focus on a lot, we focus on a lot, is, can you make an investment more than a year, right? I mean, it's a big difference. Yeah. Do the math on your investment. Where you're selling the stock, then chop ordinary income off of it, or ordinary tax rate off of it. So when we think, every investment I do, or not every, a lot of investments that I look at, how can I make this a year? Can I take this to a long-term capital gain, right? And then tax loss harvesting. I do, and then you're going to where you can pick lots.
Yep.
We do that all day long, picking lots. I bought this, that lot poorly. Tax loss.
Mm-hmm.
So,
yep.
Right. And so, we do a lot of this stuff, and if you compound like that over time, that's how you make money, right? Mm-hmm. And minimize your tax bill. Obviously, ETFs and robo-advisors do that pretty well in terms of tax loss. Mutual funds, not a tax efficient vehicle. So
for the IRS agents out there, Porter does not like paying taxes, but he pays his taxes.
I do.
Just so we're crystal clear.
You're the only guy who looks like an IRS agent in this whole thing. Let's be clear on that.
He's the only one who looks like a banker in here, too.
Yeah, that's like a banker vibe.
I'm going to give a little plug. At 2:30, Q and Obi and I, we're going to do a options breakout. And there's lots of actually options strategies that help you stay in a position to get to that 1 year sort of thing. And, one of them is a collar, and we'll break that down. Let's say you have some big winner over the last 9 months. You just need to make it until 2025.
Yes.
You sell an out of money call. You buy a downside put. You've created this structure where you're in the name. It gives you the opportunity to make some money to the upside. It caps your risk to the downside, and maybe you get to that 1 year period.
There's a good example recently. We actually came on your podcast, which is fantastic.
Wait, who listens to On the Tape podcasts in here? Do we have any listeners?
Wow.
Oh my God. All right, listen. Pull your phones out. Go to the podcast store. It's called On the Tape. Just, what do they want to do?
It's excellent.
Smash the shit out of the like button.
Yeah. Or subscribe button. We got 3. We got Market Call, MRKT, Call, Market Matrix, MRKT matrix. Go follow him, people. Enjoy it.
So let me just say, because
Our track record's been pretty good.
you guys have been amazing.
It's been I don't know what's going on, but we've been
I don't want to talk about it.
it's been pretty good on the podcast.
You don't want to jinx
so-
it?
No,
You
don't
guys,
wanna
they
jinx
were
it.
one. They were, I think. So Danny joined us as a co-host right out of the gate, and he's like, "You got to meet my partners here." And I think you guys were one of the two of the first guests, weren't you, on the pod?
I will tell you, they've given out over the last 4 years names, thesis on markets and so forth, and your batting average is better than the Mets last night, Vinny. It's pretty good. So,
Well, let's talk. I'm going to talk about that in a second. And I think this is important for the folks in the room. And we've all collectively made all the same mistakes that you seemingly probably make every day, and you beat yourself up over. I'll say this, and you're really fortunate later today. You mentioned Mark Fisher is going to be here. For those that don't know who Mark Fisher is, he's an absolute legend in my world being commodities. And Mark is going to tell you things about the discipline of trading that's going to seem somewhat counterintuitive. But, before we get into some of the macro and other things and some of the trades, I'll say this. It's very hard to wear both hats, those of a trader and those of an investor, because this is what winds up happening. When you put on a trade that goes poorly, it becomes an investment. When you put on an investment that does extraordinarily well very quickly, it becomes a trade. And it's very hard to divorce yourself of that. And everybody in this room I know has done it because I've done it myself. So every time you enter something, is it an investment, to Porter's point, or is it a trade? And sort of have that Chinese wall, that line of demarcation. And I think once you can wrap your head around that, it makes life a lot easier. With that said, there's obviously a lot going on, Steve, in terms of there's an election, I think 19 days, 20 days.
Yep.
And I'm sure a lot of the client base, a lot of the customers have questions as to what will happen vis-a-vis outcomes. So speak to what you're hearing. And I don't want to get into politics. I'm not interested in it, but the impact of the election, in your opinion, in terms of the markets and for the folks out there.
Well, I think it's it's already like you're watching the polling and it's moving certain names. I don't want to get into those names, but we can. Well, you guys can. Yeah. You can see one that moves pretty wildly based on the polling, and polls drop 3 times a day, and suddenly it's up 11, down 10, up 8. But now you're seeing it in financials and others, and so the one thing I would say is I do think it's going to be a little more volatile as the election. They always say that election years are volatile. I think it's actually the year after the election when the administration starts doing what they're doing, when you start to see more of the sectors shift back and forth based on what they're really going to do. So I think getting ahead of that and understanding what's going to happen, it's not easy. I mean, you guys do this. So, any insights that you would have for this audience would be amazing.
I mean, it makes sense. I mean, we've talked about it many times, and we've been working together, since 2002. So we've seen lots of election cycles, and a lot of times you have 4 to 8 years to put on a trade and see how it plays out. I mean, obviously, if the difference between Trump and Kamala, who wins the election, it's going to have huge impacts on different sectors, and so. What we have is a whole list of, stocks to, be long, stocks to avoid, which is the key for people who like to short. So, if I know that I'll say it, Tesla, right, is a very Trump stock. And I've been a very vocal person against Tesla. I don't want to really be short that in the near term if he wins, right? And so knowing when to avoid stuff is good, and we all have biases, and try to, strip out those biases, especially what we do, and I've learned this over time, is not have a political opinion. It's very dangerous to have a political opinion and trade stocks at the same time, right? Because you talk about biases, right? And to be an objective trader or investor, you have to strip away those biases. And so I look at it objectively. Who do I think is going to win? Maybe your person, isn't going to win the election. You still have to invest properly and take away that, oh, my candidate lost. Who cares? Move on.
Porter, I think you're being overly objective. In Tesla, you just called it a Trump stock. I could make the argument that it's not a Trump stock. He's been talking about tariffs on Chinese EVs, right? He's been talking about no tax credits for EVs, right?
It's a tough stock because listen,
Dan,
But
this guy, the guy's not the guy. I call Tesla a fundamental analyst's worst nightmare.
it's terrible.
no,
It's the worst.
Yet
it makes
the
no
largest
sense whatsoever.
market cap company that is massively underperformed the
But
stock
Dan,
market.
one thing I'm pretty certain of.
Yeah.
The guy's really smart. Whether it's marketing, it doesn't matter. He's not going out campaigning in Pennsylvania for the next 3-4 weeks to slap tariffs on his cars from China. It's just not going to.
But
It's just not
But
going to.
again, my point is, it
I
might
agree with both.
It might not be. He might turn around and just screw him. I mean, like, think about it. I mean, like, so if he's talking about tariffs on every product that's coming into the United States,
But again,
how do you not do EVs?
sometimes you have to put it in a pile of too hard.
Yes.
Like I don't know. Is it massively overvalued? Yes. Is the hype train high? Yes. Does
You
he make
have people that agree with
does he
you.
make
out there,
cool
yeah.
products? Yes. Like so, it's like sometimes this the pile of too hard. And listen, if it goes up 50% because Trump wins, I'll be back short of the game.
Yeah.
Right. And so again, try to be objective on these things.
Vinny, let's talk about the energy trade because it's interesting. I think
Thank you
people
for taking
associate
some-
the
yes.
energy trade with
Well
the
done.
underlying commodity of crude oil. And obviously, there's been a lot of volatility around the crude oil trade.
Mm-hmm.
But these energy stocks, it's fascinating. I think for a number of different reasons, they've been forced to be better operators. Their balance sheets collectively have probably never been better. The way they operate, their productivity. I mean, these are companies now that are probably working better than they ever have before. And there's some unhidden gems in there. And I find it fascinating that a gentleman like Warren Buffett, who I think owns, and don't at me if I'm off, but I think 32% or so of Occidental Petroleum, by the way, a stock that has not moved since he bought it, but he obviously sees something. And you've seen something in the space as well. So speak to the value in the energy trade, because I do think, AI, obviously technology's taken a lot of the spotlight. But I think in 2025, and we're fast approaching it, I think energy is going to be a sector that people want to look at.
It's interesting because energy right now is suffering from, I would say, the perception and reality of poor economic demand, right? And I always laugh that if you ever hang out with people who really know energy, and I would say we understand it, but we don't know it. The geeks, the sector specialists, spend all their time on supply, right? The generalists spend all their time on demand, right? You're not going to get that surge up in these stocks until we have economic stimulus. You could see it a week ago, 2 weeks ago. China announces a stimulus package, oil goes through the roof, right? So it is a coiled spring. It feels like a coiled spring. Almost all things energy. They're extremely underowned. No one here probably owns that many energy stocks. But you're going to need a spark, right? And I don't think they're going to work without a spark of some kind. And I isolate things like uranium from old fossil. It's just different. But they are very cheap. We own a bunch of them, and it could be a big winner. But I actually think you're going to need, so long as the perception of the economy remains poor, these stocks are going to struggle.
Can I ask a quick question? Because this is a weird market to me in that I don't even know. I can't keep track of how many highs we've had this year. It's almost 50. It's like 47 new highs. But when I talk to people and listen to our customers, I don't think they're that enthusiastic about the market. So I can't figure out, it's like an unloved market that keeps making new highs.
Well, Danny can speak to that.
I would say that we can go a little bit into the macro here, is that, and it really took me a while to come to this conclusion, to really understand this, that when you have a deficit like we do, it really drives growth in the market. So you're obviously, ever since the financial crisis, the rules have changed. What do I mean? Once the Fed got involved and 22 acronyms came in, TARP, TALP, PPIP, all those things, new acronym, BTFP last year for CIV and all that stuff, you realize the amount of liquidity that's in the market and the quote that the Fed has your back and they'll just keep printing. So with that as the backdrop, it's very difficult to gauge from a valuation perspective that you're making. No one's comfortable because we are sitting at 21 times earnings in the market. Historically, that's very high. But historically, we've never had a deficit like this. Historically, the Fed's never owned so much of our paper. So you have to get the macro into the micro to get that comfort level. And I'll tell you, back to the comment about the election and so forth, the one sector that we traded was financials, right? So you think about the one sector that's most impacted by regulation is financials. But if you take the mentality and look at a financial company, everything spawns from a financial company. What do I mean by that? There's nothing more important to a bank than their balance sheet. Well, you can extrapolate that balance sheet analysis to any company. You can start to think about things. So having that as a background, but it makes it hard, right? And when we left after the Big Short, we started another hedge fund called Seawolf Capital, and we were trading financial services long short into the most regulated entity where yield curves being controlled. And so those are the things that obviously you need to pay attention to. Back to your comment. Yes, I think the market is expensive, but people will pay a premium right now for growth in companies, and you're seeing this bifurcation. It does scare me that how top heavy some of the stuff is, but until you're proven wrong, it's a hard trade, to fight here. So I can go on.
Vinny, over the last couple of weeks, a lot of news out of China in terms of what they're trying to do. They'll say for their economy, but I think it's targeted against or for their stock market, clearly. And I know Alibaba's been a name in this room that a lot of people have traded. And, if you were to look at that stock over the last 4 years, it's been an extraordinarily poor performer. But over the course of those 4 years, there probably been now 10 times where the stock has rallied anywhere from 35 to 60%. And we're sort of in the midst of one now. So I'm not asking you to opine necessarily, but sort of the opportunities around those types of trades when you see that kind of central bank intervention.
Well, for me, and we talk about trade versus investing. I view trade as a trade, right? Because I don't have enough knowledge. I don't really trust whether the financials I'm looking at. So automatically in my head, it's a trade. And what that means is if I have gains, I take them probably quicker than we would for an investment. With Alibaba, we started investing in it at $68, $70.
Yep.
And we tried a few times, failed. But for some reason, we just put a little on and said, all right, let's just keep it. Because at some point, this stock is, assuming the financials I'm looking at are correct, the stock is way too cheap. They're doing very similar things to these U.S. companies, and it trades at a fraction of the multiple. And I just let it sit there, right? And all of a sudden, China announces what they announce, and boom, we look for opportunities like that. However, you always kind of need a fundamental spark. I'm a big fan of fundamental rate of change, right? And that's the things that I look for to say whenever I'm putting on a position saying, are things going to get better? It could go from suck to less suck, right?
Those are the best stocks, by the way.
Those are the best stocks. But you need the positive inflection because then all of a sudden that's going to bring out an audience.
One of the things you guys announced last night, I think, is part of what you guys are going to be offering are things like RSI, Relative Strength Index. And between sentiment and RSIs, you can kind of know when you're offsides or onside, to Vinny's point. And Vinny looks at RSI. So an RSI, just to be clear, like a 20 RSI is very low. Relative strength versus the market, an 80 is very high. So you know if you own a stock that has an 80 RSI, you're on a little bit of borrowed time for some type of correction to come. BABA RSI was probably 22, 25 or something like that. So you know you're getting paid. There's nothing, quote, built into the stock. So sentiment indicators like that are very important. And right now, just in the markets in general, AAII or whatever you want to use, the bullish camp is extremely high. You just have to be aware of that when you're trading and just be honest with yourself and incorporate that mindset.
And that's some of the things that you brought forth, which is why the platform is so helpful, I think. And I think once people sort of learn how to, it's interesting, you can drive a Volkswagen, you can drive a Maserati, and you can work your way up to that. And there's a learning curve associated with both. But once you get comfortable with those tools, Steve, I mean, it opens up a whole new world in terms of understanding trading, and then sort of the light bulb goes off. So speak to that.
Yeah, I think there's been a belief that, in order to get the suite of capabilities and tools necessary, it has to be complex and difficult for people to understand. And I think, like Robinhood, we've fought that since day one. Like that's just not the case. And so, it doesn't. Part of that is a little bit intentional. If I spend hours and weeks and months configuring an application. And I think that's what I have to do if I would transfer my account somewhere else. I'm not that likely to leave. We just reject that. Like we just reject that. And the best, really the best fact that we can illustrate is we're at 58%, almost 60% U.S. households participating in the market. We go around to other parts of the world and explore opportunities. They're at 20. Mm-hmm. They beg us to come. They want the Robinhood effect. They want people participating in the greatest wealth creation vehicle in the world, which is the market. And so they're like, how can you come here and help us get more people to participate? Well, the way is remove the friction, remove the costs, remove all the barriers. And that's why we have such a young, half of our 24 million customers are first-time brokerage customers, and they're young, they're diverse. They don't look like the people at some other brokerage firms. They don't invest like the people at some other brokerage firms. And it's our job just to make sure that we keep that door open.
Last night I met a bunch of people, but I met a husband and wife from Houston. You here? Where are you two? From Houston, Texas. And you said that I wouldn't give you a shout out. I know you're in here somewhere, but they came. Both of them came so excited to be here. He trades. She wants to learn how to trade. And I think that's probably emblematic of what's going on in the room. So I just wanted to throw that. Real quick, we talk about gold a lot, and I'm not suggesting anybody here trades commodities, but Vinny, I think there are a lot of opportunities that the market is not looking at in terms of the mining stocks. And if you think about this for a second, the stock market's at an all-time high. Gold's at an all-time high. Some of these mining stocks, for example, Newmont, a Barrick, and Agnico Eagle Mines, they're probably trading, well, Agnico notwithstanding, 50%, 60% of their prior highs. Reasons why, and there are hidden opportunities there.
This is a whole deeper subject of
This is
gold.
a deeper subject, yeah. And I was going to say, I'll try to get this in really quickly. First off, the reason why we like gold, starting with the top-down theme, is we are very concerned about our fiscal situation, not just in the U.S., but globally. I mean, you can't run 6 to 8% deficits in perpetuity. However, the one thing I know is the way you get out of this, or try to get out of this, is to debase the value of the dollar that's in your wallet. So 10 years from now, it's going to be worth less and buy less. So how do you preserve your wealth and your status? Well, you go to hard, tangible currencies, gold, silver, and quite frankly, Bitcoin power presentation is based off gold. So our overwhelming bullish sentiment on gold is based on that. Then from there, what we try and do is pick and choose a bunch of names. We've decided, fortunately this year, that when you have a top-down theme like that, the first thing you should do is go after the most liquid and largest names and the best run. Don't worry about valuation as much. Don't do the stupid stuff that we do. We will stay with it because I don't see how as a country we get out of this. So I'd rather just have gold in our wallets versus cash.
And one thing on the miners themselves, they benefit as energy prices come down. That's their biggest input. So if you were to chart oil and if gold is up and oil is down, the miners are going to outperform gold. The miners have trailed gold, as you know, for a while. They're starting to play catch up a little bit as a way. And that's just math because they have so much in the ground. You can value these companies. And so, again, I look down the list of, the kind of the top 20 or 30 names that are traded. And I didn't see one gold miner, on the list. I don't
Not
see
one financial.
I don't
not
see one energy
stock.
company on the list. I
Oh,
don't see
BAC was in there.
What's that?
BAC was in there.
Okay.
Yeah.
But in general,
That might be
Wait,
Warren
is-
Buffett selling it.
But
so.
yeah, Warren Buffett's a client.
No.
Do yourself a favor, though. Again, measuring sentiment and everything. When you don't see a name on a list and you own it, that should excite you if you have a good thesis, because at some point people will play catch up, whether that's in the miners or anything else.
Some of the names that are on the list, obviously, are all the AI stocks. And, we try to sort of connect dots, Dan. And last night, Taiwan Semi reported an extraordinary quarter. As we're sitting here, it's probably up 7 or 8%. 11%. And it's dragging the rest of the space with it. But 2 days ago, we heard from ASML, and it was a completely different story. And, I think as we sit out in this room, how do you sort of connect those dots? How do they sort of fit together? Speak to that.
All right, I'm going to do this really quickly because I think this is really important. So, Guy just mentioned Taiwan Semi. They make 85% of the high-end GPUs. What are those? Those are the chips that go into the servers, right? That go into the data centers that train the large language models. who are the buyers of those chips? Well, they're the large hyperscalers. Who are they? It's Google, it's Amazon, it's Microsoft, right? So those are the three largest. And then Meta. Those four stocks, those four companies make up 40% of NVIDIA's sales, right? So like I try to put this all together. Who are the server guys? Okay, well, that's Dell and Supermicro. Those names have been on your list. Who provides the memory? Oh, that's Micron, right? And so this is fascinating. Taiwan Semi, if I wasn't here right now, I'd be listening to their conference call, all right? I'd be trying to figure out, put the dots together, because Guy just mentioned this, ASML that makes the equipment that goes into the foundries, right, that make the chips. That stock was down 20% in 2 days after they reported a horrible quarter, like for the existing quarter. Their bookings were down more than 50% of what folks expected. But here's the most important point that I'm looking at today, not having read the Taiwan Semi transcript. So if their biggest customers of NVIDIA are those hyperscalers, why are they all down today? Why is Google down today? Why is Amazon down today? Why is Meta down today, right? And so then I start thinking about, wait, so we've been talking about this Mag 7 for like a year and a half now. I'm looking at year to date. There's two stocks in the Mag 7 that are outperforming the S&P 500. It's Meta and it's NVIDIA. One's up 80%. The other one's up 180%, okay? So the trade is getting narrower and narrower. The news it's not really getting incrementally that much better. And you got to focus on, so in the next few weeks, when Microsoft and Google and Amazon and Meta report, I am going to be so fixated on what are their CapEx, okay? What are they spending on these chips and on these servers that, and all that sort of stuff that we put together. So to me, this is one of the biggest themes in the market. They are 30% of the S&P 500 weighting. They're 50% of the NASDAQ 100 weighting. To me, this is kind of the key to what Q was just saying. Why are people so pessimistic about the market? I'm looking at industrials have broken out on a runaway breakout. I'm looking at transports about to break out of a 4-year base, right?
Financials are breaking out.
Financials just broke out. So these are all soft landing things, people, right? And so if everyone's so pessimistic, maybe that's the thing that keeps the market going higher.
By the way, you know what the worst sector is of the last 3 months? Tech.
Yeah. On a relative basis, it's been underperforming.
Absolutely. It's been the worst sector. It's, which is
For you
unheard of.
5 on the tape fans out there, if you've listened for the last few years, you will know that 3 years ago, Danny Moses had an heroic NFL season in terms of your prognostications. Do you remember
Walmart?
Do you remember? I will bring it back to Walmart in a second. But do you remember what your record was in the NFL?
27-6 against.
Was that
27-6?
27-6. I mean, that's unbelievable, right?
Yeah.
The last 2 years, not so much. I mean, I think
Over
it's
500.
yeah. But you found opportunity in some of these stocks. You have talked about Flutter. You've talked about DraftKings. I'm sure those are names that are traded here. So speak to the trading opportunities around those.
Yeah, so I like to look at a sector, call them sin stocks if you want, gambling sector. States need it. They need revenues. They need to tax it. There was no stopping it ever since the Department of Justice overturned kind of the ruling that it actually was legal. So since then, you say, all right, who are the players going to be? And back then, there was only a couple ways to play it. A couple companies went public via SPAC. I talked about before. DraftKings was a SPAC. And so it had a negative connotation to it. Genius Sports, which I like, GE&I, was a SPAC. So I look at the sectors, they're under-owned, whatever. So thematically, it's a growth area. Texas and California don't have online gambling yet. Florida just kind of started. So I look at that, and then I pick the names within those that I think are cheap on a relative basis, cheap to their growth rate. So something like that. I mentioned before, I was kidding, but Walmart was a name just in general, a thematic play over the last 3 to 4 years. Once we had the inflation, once the economy was where it was, the trade down from the middle and higher end into Walmart and Walmart's move into online and e-commerce, that's a secular shift. That's not a cyclical play. So the point being, I look for secular shifts in sectors, secular shifts within companies that can survive any cycle, that don't have to trade within a cycle. So if you can do that and find those on the long side, you can do very well. So I still like Flutter here. Listen, the thing you have to watch out with any of these new sectors like cannabis or online gambling are taxes. And you saw Flutter get hit the other day on the UK talking about doubling the tax rate on these online gambling companies. State of Illinois a few months ago, DraftKings stock got hit. They took the tax rate from 15% to 39%. So just when you think you have the fundamentals figured out in a company, something whacks you from the other side. And
that comes into the trade of governments are broke.
Right.
Right.
Well, exactly. So you're trading into, these aren't going away. I mean, so believe me, they're a huge source of revenue.
So I want to say something, Guy, because you've been talking about this, and this goes back to the AI trade, and he's made this point really well. And I haven't been focused on retail, but everyone, as far as AI and the spending, are trying to figure out what are the use cases. And Guy looked at Walmart's quarter, I want to say a month ago or something like that, and again, digging into it. Well, you saw that e-commerce accelerated. And I'm thinking about this because you just mentioned that. And the company, on a couple of occasions, and it was not really caught. Is this fair? They were talking about how their AI investments have helped that acceleration. So if DTC or online e-commerce is becoming a greater part, it's working into their bricks and mortar sort of stuff. So talk about that, Guy, for a second, because it's connecting a handful of dots there, and it can almost give you a preview of how AI is going to work itself into other sectors that are not being appreciated right now.
Yeah, no question. Goldman Sachs had a note out a few months ago in terms of when are we going to start to see the ROI in terms of the AI spend and who is going to benefit from it. And I took a lot away from that. There's the spend is obviously there. We see it over and over again in terms of NVIDIA revenue and sales. So people are clearly spending money, but when are they going to start to see the return? And, for the last couple months, I've seen it in two different places. I saw it in Facebook in a meaningful way. And to your point, I think that's why Facebook is trading at an all-time high-ish. And I clearly saw it in Walmart, and Walmart talked about that. And if you think about a company or a stock like Walmart, yeah, it's been expensive, but it's been expensive for a while. And you sort of unearthed that a couple of years ago, the hidden value in Walmart. And as they get more efficient and those margins, which are razor thin, improve by just a hair, the meaning for the stock is significant. So, those are the types of things that I'm looking at. And just as a PSA, I don't puff the magic dragon and never have. And I'm not a sports gambler. As you tell, I'm a bit of a stiff. But in the final couple minutes, Vinny, themes, if any, that you're looking at for 2025, which is right around the corner?
Well, the first thing we have to do is get past this election, right? It's hard to really talk about themes until we know who's in charge. And I think there are seismic differences as to what we will look at depending on who's in charge.
Okay, Vin, let's go there then. So, the odds are showing that, the Trumps might win, right? That it was more 50-50 a couple weeks ago. Now it's kind of...
And you see that in the stock.
Yes.
Right? So, for example, like we've covered banks our entire lives. That's where we grew up. Banks are starting to move. And there's a host of reasons why. Fed's cutting rates, steeper yield curve. Look, actual bank earnings were pretty good this quarter so far. But to buy them here, you have to believe that Trump's going to win, my opinion. If Kamala wins, you have to sell it all because regulation's going to be there. Regulation's going to stay. So in terms of the regulated banks, other things, I just think I have to wait until selection comes and then we could sort of map out accordingly. But we do, sorry.
No. I mean, we have, you talked about it on CNBC, our one studio appearance on Fast Money.
Yes.
If Trump wins, the Fannie Mae preferreds are going to go crazy.
I didn't want to go there because they didn't want to talk about illiquid stuff. But
you pitched it on CNBC.
I did pitch it on CNBC. Like one of the entities that a lot of people don't know, but it's the most prevalent financial services companies in our country. One of the most is Fannie Mae and Freddie Mac. They've been in a prison hurt locker for 8 to 10 years under conservatorship. If Trump were to win, so there's a big if, it's 50-50, these things should take off because there's the perception or potential that they will be taken out of conservatorship and go public. So it's a bit of a gamble. You talk about the trade there, but the upside is huge. So talk about what I'm doing for 25. We own a smidgen of it. And if it goes up, we'll do pretty well.
It was a great line, and there were many great lines in Wall Street. One of my favorite is, and we use it all the time, he wouldn't know preferred stock from livestock, and I'm sure that's probably resonating with some of the people here. Danny, some quick thoughts as we get towards the end of the year.
I just think, obviously, with the election, everyone wants gridlock, right? So you don't want any one party to control it all. I think that's the other bull thesis in the market. So there's nothing crazy that kind of happens there. There's certain trades, I think, like uranium and so forth, nuclear, that are going to be good regardless. Certain things are in motion. And, I think what's underappreciated in this market in general are top management teams and how they've navigated through inflation, as inflation comes down. I look for companies that don't complain about, rates. I look for companies and I think it's underappreciated. It's really amazing when you see like a shift in a CEO, like at Nike or something what happens to obviously stock, and you realize how important it is and how companies evolve. And so, I like to be looking at dynamic companies that can survive and trade in any type of outcome, again, that have been through cycles before and so forth. So I think, listen, I am trying to be more bullish over time within the structure of everything, but I'm very concerned about our debt and our deficit. And at some point, it's going to matter. But until it matters, then let's just go buy everything and grow stock.
All right, but that's not a recommendation, people. And when Vinny said sell them all, that's not a recommendation.
But people,
either,
I'm just saying,
okay?
people just need to realize at some point. But yes, I could go on there.
Steve, you built an amazing community. In the last couple seconds we have, speak to what people have to look forward to. I mentioned Mark Fisher before, and what your vision is for the company and for the community.
Well, I think it's an extension of what Vlad and Beju did. They started this company with wanting to democratize finance for everybody, and not just in the U.S. but in the world, and be the home for all of their financial service needs. And I think we're on a great path to do it. But you have to put yourself in their shoes. And I am one of you. I'm a retail investor. I came from the other side of the fence, but I think you just have to cater to everything that a retail investor wants, and they just want the same things that anybody else has access to. So we're not all the way there yet, but we're on a pretty good path.
You're getting there.
Yeah.
You should be really proud of what you've done. More importantly, what you're going to do. We're all going to be around today, so please come up, ask us any questions you want. It's been an honor being here so far, and I look forward to the rest of the day. Dan Nathan, Steve Quirk, Porter Collins, Vincent Daniel, Danny Moses. Thanks, everybody.
Thank you.
That's it.